Um, hey guys, check. 1 2 3, 1 2 3, 1 2 3. Yeah, I think all of you guys can hear me clearly. Wonderful. Awesome. So let's quickly begin. Let's not waste any more time. So first of all, I think we're doing a live after a very long time. So how are you guys all doing? All good. Market obviously has not been great. Market has not been doing as good as what we would think the market would be doing. But again, that is not our lookout. Our lookout is to understand the market, look at it, see how we can analyze our own structure in the market, and then take a call. Obviously, the market has not been great, but doesn't mean that there are other stuff that is not going to do great. So today, what we're going to do is we're going to quickly understand the market. We're going to look at some key levels. We're going to look at some sector rotation, what's happening there. We are also going to look at some important data points about this war. So let's quickly go through all of them today. A lot of learning to do today. So let's quickly go through all of them. Okay. Awesome. First things first, let's look at the US market and let's look at some important structures on that. So what is happening with the NASDAQ? So if you look at the US market, the NASDAQ has also become very weak. Now, obviously, we know that India has become weak on a long-term perspective, but US was always the one that was surviving this impact. Even though they were the guys who did the war, they were surviving this impact, and that is something we can see now firsthand. That Nasdaq, this purple line, by the way, is the 200-day moving average. So Nasdaq has now broken the 200-day moving average. Even if you look at QQQ index, they have also now broken the 200-day moving average. So both Nasdaq and QQQ have become weak. Even if you look at the bond prices, they are also looking not attractive for US, which is usually when the bond prices go up is when Donald Trump usually tacos and he chickens out and they usually close the deal. But looking at the comments that are still coming out, I don't know, it's become more like an ego war versus an actual war where US is like, we are winning and we will remove you guys from the map. And Iran is like, okay, try, bro, do what you want. And then in the end, nothing happens, right? That is exactly what's going on right now. It's pointless. It's just going on. There's no inevitable end to this war because Iran will not give up, nor will Russia and China let Iran go to US. And US also has to save face, so they will also not do anything. So there's no point of this current war, right? Nothing will happen. At the end of the day, I don't think anything will happen. Coming to gold, gold has also become quite weak. If you look at gold, it has come back to its previous breakout zone. Not looking good at all. I believe that if gold breaks this 4,500 level and it can't sustain, then gold, the next support looks at 3,900 only. So gold also is not looking good. Now, yes, there is a lot of question on Shashank. Why is gold going down? It should be going up because there's a war. So please understand that when oil goes up, gold will not go up. Okay. When the dollar index goes up, gold will not go up because oil and dollar is slightly better to invest in than gold. Yes, central bank buying will continue. All that will happen. There is no problems over there. But right now, there is a lot of pressure on gold. For people who are buying gold long term, don't even worry about anything. These are all small fluctuations in life. But people who are swing trading in gold, yes, you have to worry a little bit because this is a very key level. If it breaks this to 4,500 level, then it is going down to 4,000. If it sustains this level, then there might be a ping off effect. But yes, as long as oil is rising, gold will not go up as fast as possible, right? Coming to, let's look at Brent. Okay, you can look at W. I mean, you can look at either or. If you look at Brent crude, it is now at 107. It is still high. It has not gone down. It is still high, which is not a good sign again. Because see, for us to understand when will the market go up, a lot of you guys might have that question. That Shashank, when will we rally? When will we go up? When will this all get over? The first signs will be the oil price coming down. The first sign. Okay. So if the oil prices start going down, also please understand that the impact has been so much that they bombed so many refineries, Aramco refinery, Qatar refinery, so many refineries have been bombed that this will not like suddenly go down tomorrow. Yes, once the war is over, maybe from 107 it will come back to, let's say, 77, 78, but I don't think it's going to 58 anytime soon. We were at 50s level, right? We were at all-time low 58, and from 59, 60 it's gone to 110. So it is almost doubled, which is not a good sign at all. So even if the war gets over, it might come down back here to 70s level, but it will not go back to 50 level. So that will take some time. But that would be the first indication of a reversal. The oil prices have to shoot down for the market to start going up would be the first indication. Coming to USD INR, if you look at USD INR, this is the only commodity that is breaking out constantly, right? USD INR is the only thing that is going up constantly. It has given great returns, and it was 84 levels in the March era, and now it has gone to 93, and it's only going up. It has broken out, then again broke out, then again broke out. Now I must give it to RBI. They did try to do a lot of firefighting. They did try to protect the rupee. It's becoming very difficult for them to protect with all of these global impact and the FII selling. Nothing looks great, right? If you look at the FII DII summary as well, how much can they defend? Look at this. This is the monthly trend. This is the red is all the FIIs selling. Okay. And if you look at the green, it is DIs buying. So they can't keep defending all the time. They have tried to defend as much as possible. And I mean, this is the summary if you really want to see it. And if you want to see the yearly also, it has since 2021, they have started selling and then they've gone even more. In fact, all the IPOs that have come, many of these guys have taken the money and gone back. So you can defend up to a point. After a point, you cannot defend the rupee. But yes, it is not looking good. Coming to Nifty 50, let's look at Nifty 50. This blue line, as you can see, is the 200-day moving average. Nifty 50 very clearly, without any signs of reversal, is in a negative zone. Okay, there is no clue about a reversal coming in here. And if you see it, it has gone down from the 200-day moving average. We are down around 9%. During the last time we did this fall, on this time we had gone down almost 8%. So every time it breaks the 200-day moving average, the fall is around 8 to 10% from that time, right? If you go back and see the Russia-Ukraine war over here as well, when it broke the 200-day, we had gone down around 9%. So 8-9% here, 8-9% here, and now around 7-8% here. So if you look at the previous times this has happened, the previous bases this has happened, you can say that we are very close to the bottom, but again, nobody can time the bottom nor the top. But yes, looking at past data, we can put some analysis on it. Is this a good zone to enter? Like, is this a good time to buy long-term fundamentally good stocks? Answer is absolutely yes. This is a good time to buy fundamentally long-term good stocks, not a bad time at all. But can you have taken a cash call somewhere over here? Answer is yes, because please understand, every time the market breaks 200-day moving average, it has not been good. Okay. Every time it breaks 200-day moving average, please be very careful that things have not been good. And the same thing has happened. It has broken and a lot of macro effects are going on. It is not good at all. And obviously, I don't expect everyone to take a cash call. It is very hard. We recently took it, actually. If you remember, in our Fluid Q, we basically took a cash call on 5th of March. 5th of March, we took a cash call. And then we just sat on cash. We took cash and gold, but then gold kept falling. So we recently removed that. And now we have started buying a little bit of index. So this is where we took the cash call on approximately 5th March, right? So 5th March would be somewhere around this zone over here. 4th March, 5th March. This is when we took a cash call over here. So we understood that the weakness was persistent, and we took a cash call here, and we basically saved around 7% of fall. So that is something we're still, holding on. But yes, nothing is looking attractive. The only way this would be a V-shaped recovery is if the war gets over, which is not looking very likely. But it can happen anytime. That's the best. That's the best part. Now coming to key levels. Okay, we are at 23,000 right now, which is a very good zone. It is taking some support on this. But if that breaks, the next support looks like it is this 21,800 is where the next support is. As you can see here very clearly on the long-term chart. If we break this support zone, the next support zone is straight away over here at 21,780 on the technical standpoint, right? Not saying that we will go there, but if from a technical standpoint, I'm doing analysis, that would be another 5% drop. And it would not be surprising because if I actually show you the history, look at this, right? September fall, we have fallen 17% from top to bottom. Nifty 50. Over now, we have fallen only 12%, approximately 10%, not even 12. Yeah, 12%. The last time we went in Russia-Ukraine war, if you look at top to bottom again analysis, we had gone around 18%. So 18%, 17, 18% has been our average trend of falling from top to bottom. This time we have gone 12%. Again, even in this time, it was the tariff issue which we were affected. Now it's the war issue. Russia-Ukraine war also, we were not involved, but the energy crisis happened. A lot of people don't remember this, but when Russia-Ukraine war happened, very few people remember this. But when the Russia-Ukraine war happened in 2021, 2022, at that time, your oil look at this. Your oil had gone up to 130. Same problem, same thing had happened during this period. Nobody remembers this. Everyone's like, oh my god, oil's going up to 100. Bro, we had seen oil at 130 in the Russia Ukraine war, and then it stabilized when the war kind of got baked in, and all the routes were allowed again. But it did go to 130, so we are currently at 107, not 130. So this is nothing new, right? If you're seeing that this is a huge impact, it is not. Russia Ukraine was even worse. In fact, at least this is going in a single direction. Russia Ukraine war actually gave us a lot of hopes in the between, right? It tried to give us reversal signs, again fell down, went up, again fell down, went up, again fell down. So Russia Ukraine was even worse because of the fake hope it gave all of us. Same with our US India tariff, same thing happened here also, same thing happened. Right now it is at least a clear fall, so we are okay with the clear fall. I'm happy with that. At least it's straight fall and not something that is a fake fall, right? So that is coming to this perspective. Now, these two I spoke about. Yes. What else? Now, coming to the most important part. So recently, I was reading this, a report from Dam Capital. So I thought I'll just show it to you. By the way, I'm in no way associated with them and all of that. So because I'm a SEBI registered research analyst, I have to give some certain disclaimers. I'm not associated with them, or any stock I show that I have not invested in them right now. So this is just purely for knowledge. Please don't look at anything as a buy and sell. Okay, let's just learn. So this was a very nice report. I was just reading. It came in March only. So this talks about what is the problem of the Russia-Iran war sectors impacted and quantified. I'll only go through the important parts over here. Before that, let me quickly show you RRG for people who wanted to see RRG. So this is RRG. Look at this. Absolutely nothing is in momentum. It is showing capital markets are the only one that's leading right now. But absolutely nothing, honestly, is in momentum right now. Like, leave capital markets. Nothing is in momentum. So even if I look at sector analysis, right, and I look at relative strength, it shows metals and minings. And in metals and minings, it shows all the metals and minings, all these Hindustan Copper, National Alum, but all of these companies are very trend-based companies. These are not sustained trends because of the entire imbalance in the world. These are the companies that are doing well. Absolutely right, Reddy. As you're saying, situation like this, technicals won't work. That's why I said it can be a recovery. Tomorrow, if the war gets over, it'll go up. But there are some places where the market usually takes a support. So right now, as you can see, technically it is taking a support at this zone. If it breaks, next will be 21,700 to 22,000 tak to jayega hi, and it'll take a support there. But right now the market is pretty oversold, right? So that is a good news, good sign that it is oversold. Now coming to the important parts, I'll only show you the important ones here. Yeah, so this is one very important thing: dependency on Strait of Hormuz of India only, right? So as we all know that India is a massive importer of oil and LNG, and most of it used to come via the Dahej plant, and most of it used to come via Petronet. Now, if you look at this, India's total consumption is 54, out of which imported was 50%. LPG 68% import, and oil 87% import. That is why you would have seen the news some time ago that India said, okay, we have 25 days of 25 days of sustaining, because we were not importing, we were only importing 50%. But now that time period is also getting over, and the prices have started going up, right? You see the airlines prices going up, you see petrol prices being hiked. So this is creating an issue. Oil to 87% we were importing, which is absolutely sad. But this is basically what was going on with this, right? Coming next, if you go down, here is where things get affected. Now, if you look at oil and gas, this is such a good report. I'm sure most of you guys have not read it, but this is such good learning. So please look at this very carefully, right? Let me make it like this. So if you look at this right now, oil and gas product flow chart. So in the feedstock place, all of these guys get affected. So if this goes up, all of these different type of chemicals get affected, and I'll show you the companies that get affected also. So don't worry, stay with me. But I'm just showing you all the different type of things that get affected if oil and gas get affected. And the final products are industrial chemicals, paints. Obviously, we know this: synthetic rubber, explosives, resins, foams, dyes, adhesives, your Fevicol, all of that, plastic, synthetic fibers, soap and detergent. All of these things become very expensive if oil as a natural product starts going up. And please understand, oil has doubled. Okay, raw material has doubled. Companies can only take the margin hit up to a certain point. After that, they will pass it on to the end customer, and it'll be your headache, right? So let's go down. So note, War beyond 2 months will impact the ability to pass on cost. This is what I said, right? Up to a point, they will absorb the cost, but no company will absorb all the cost. They will be like, "Ab bharo, you please pay this cost," right? So, war beyond 2 months, right now, we're I think 20-25 days into the war. Beyond 2 months, the impact ability to pass on the cost will rise drastically, and supply issues beyond current inventories, because many customers today have some amount of inventories that they've already made at lower cost. That will start going away. And the biggest companies that will start affecting is, one is your upstream oil and gas companies, infrastructure, government, potentially lower capex spend versus the budget, because when the government had planned the budget this year, they had taken into consideration oil being at 58.60. They did not take into consideration oil going up 2 times. That means now the current deficit, basically now we have to import oil at expensive rates when we do it, if it continues for 2 months. And if I have to import expensive oil, then maybe some of the projects that I said I will do in the Feb budget will not happen, because that money will start getting diverted to buy oil and gas. So then, if government capex reduces, then it is another very big problem, right? Again, we have companies will not get orders, companies will not expand, manufacturing capabilities will not expand, people will get laid off again, consumption will slow down, we might enter a stagflation, because inflation is going up because of oil, but we might enter a stagflation. So all of those issues start coming into the picture, right? Airline, I think we've already seen this. Airline fuel accounts for 35% of the total cost. 10% increase in ATF gets 15% EBITDA hit for all airlines. And that we have already started seeing. Indigo recently started something called fuel charge, where they are passing it on to every single customer. FMCG gets affected a lot. I made a reel on this recently. It didn't work, but again, people don't like a lot of knowledge. But anything that linked to packaging cost, for example, your PET chips, your bottle caps, HDP, flexible laminates, all of this account to 15% of operating cost, and this is again getting passed on to customers. So whether it is your shampoo bottles, whether it is your bottle caps, Aquafina pe jo hai, everything will get affected. Alcohol, bev, like glass manufacturing relies heavily on natural gas to fire furnaces, and spirit and beer bottles, 20 to 40% of the total raw material cost. Again, after 2 months of current inventory, margins will be impacted. So your beer and alcohol will also get expensive. So in a way, good, you're not going to be drinking too much, right? Textile, again, because raw material is polyester yarn, and our biggest Reliance Industries does all of this. So entire value chain is going to get affected, and they will increase the cost of raw materials. Cement, no impact on supply chain, as no pet coal is produced from ME, but 10% increase in international pet coal and coal prices lead to a EBITDA contraction. Home improvement, 10% again pass on here for pipes, because HDPE also increases, so your pipes get affected. Sugar, high sugarcane diversion toward ethanol in Brazil, leading to increased sugar prices. Now, by the way, sugar prices is spiking. That is something that someone recently posted on Twitter, that sugar prices have started shooting up, and that again is going to start getting more and more impacted, right? So if you want to see it, don't look at macro impact. You can read this document later. Let's look at only India impact. Oh yeah, our remittance also got affected. So what used to happen is, a lot of people used to send money from UAE to India, right? Dirhams used to get converted to INR, so that was very good, because INR used to be strong because of that. Now that has also gone away, so a lot of people are not able to send a lot of money back. So airlines, we saw alcohol, bev. So which are the companies getting affected here? So Radico Khaitan is relatively insulated in the near term, unaffected by all of this. Allied Blenders has 1 to 1.5 months of glass inventory, impact on glass bottle. But again, 2 months, if this goes on for another one more month, all of these companies will start getting into a problem because of their inventory. Automobile sector, India imports 50 to 60% of technical grade urea, TGU, from Egypt and Dubai. Both are now going to get affected. It is used in diesel exhaust fluid, DEF, which is injected into exhaust stream of diesel vehicles equipped with selective catalyst. Okay. So this is going to become a problem. This will become expensive. Basically, your DEF that you have to put in your is going to become expensive. Increase in crude is negative for domestic tire manufacturers, since crude oil derivatives like synthetic rubber, carbon black, carbon black is also going to get affected. So again, a few companies, your tire companies, JK Tire, carbon black, PCB, I think, what is that? Philips Carbon Black, that is a company. So these Agarwal Industries, these are all companies that use carbon black mainly, or even produce and manufacture. So they are going to get affected here. Auto comp manufacturers obviously are facing problems. Again, your transmission system, suspension parts. So all your auto ancillary companies you would have seen in the last few months, they have started dipping again, right? Cement we spoke about. Chemicals we saw on top. Again, I'll only look at the important stuff. Fertilizers are okay. I'm pretty sure most of you guys don't invest in fertilizers. Yeah, coming to FMCG. So PET chips, liquid paraffin, HDPE are the guys affected. So let's look at the people who are going to face a problem. For Varun Beverages, the near-term impact appears limited at PET performs are preforms are stocked through April to May. Anything above May, then Varun Beverages starts getting affected over here as well. Tata Consumer appears relatively more exposed because they have less inventory and packaging cost is 20% of raw material cost. So they are going to get affected as well. Palm oil prices tend to follow the trend of crude oil prices. So higher palm oil prices could impact Hindustan Unilever and Godrej Consumer Products because for HUL, soaps are sensitive to palm oil, while detergents are exposed to linear alkyl benzene. So these are going to get affected. So, oh my God. Margin impact BPS. This is beautiful. Estimated margin impact. Marico, Tata Consumer. So crude at 85 versus crude at 100. You get the margin impact. Huge. Huge. This is in percentage. So it is 5.98, 6.24. So it seems like Marico and Tata Consumer should take the biggest beating if this continues to go as well. Ouch. That is not good at all. Um, that is not good at all. And this is assuming it continues. And Marico right now, if you look at it, it is still at 200-day moving average. So this will actually get affected quite a bit. Infra spending, as I told you, because of this, we have to now start importing more. It is going to every $1 in increase in oil prices impacts the Indian government revenues by 100 billion rupees. Not good at all, because we have we have I think 20-25 days of inventory. But immediately after that, we will start having to import at very high rates, and everyone is going to get affected. So a lot of people are asking, why is ONGC not going up, Oil India not going up? That is again a very confusing thing, because they should be going up, because whenever oil prices go up, ONGC and Oil India are usually positively impacted. They usually go up a lot, but they are not being going up too much. HPCL, BPCL, IOCL will obviously get impacted negative. IGL, MGL negatively impacted. In fact, your LNG terminals, all of that have also got impacted a lot. Petronet, as I remember, I told you, Petronet also got impacted. There is one InvIT, infrastructure trust, which trades the KG Basin pipeline. They have got impacted, but they have also said that pipeline only 85% was domestic, 15% is imported. So only 85% is fine, 15% has got impacted. So a lot of InvITs have now got affected, and a lot of rich people invest in InvITs as well. So we have to be very careful. If you are in this sector, anything that I have shown you today, please understand why you have got affected. This is a very important document that I wanted to just run you through by, and that is where the problem is. Right now, coming back to, let's look at some interesting companies to look at. So let's just look at some companies. Not all companies are down, so let me look at some interesting companies. I think there are 2-3 companies that look slightly better than the rest. For one is like Aether Energy. So again, if you look at Aether Energy, this is something that is sustaining this country in this economy. By the way, please understand, this is not a buy or sell. I'm just showing you some setups that are little okay. So Aether Energy was one. What was the other one over there? JB Chem. Yes, JB Chem was another one. This is also sustaining. And the third one was CCL. Even in this bad market, these are the companies that are actually sustaining, because they have not much to do with the war. So these are the positive guys in this today's market that are somehow sustaining. Coal India, Aura Pharma, all of these are somehow sustaining in this entire market, right? Everything else, they're not doing good at all. Everything else, they're not doing great. These are somehow sustaining in this terrible market, right? Let's do one thing, because all the companies are not doing good right now. I mean, pretty much everything is bad. I have done on the YouTube channel, you can go and look at some interesting companies we have spoken about in the past. But let's do a quick Q&A for 5 minutes. I just want to come and give you a summary of what's going on in the market, give you some key levels to look at. But I think it's better we also look at do some Q&A, because I know you guys might have a lot of doubts. Gold, I think I already mentioned, it is currently at support zone. It is going to go down further if it breaks the support zone. but don't get too bullish on it. Long term is fine. Short term, be a little careful about it, right? But anyone who has any questions, let's quickly take up some questions. 5 minutes I have. But today's main agenda was to just come and learn the impact of the war and look at Nifty key levels and all of that. So we've looked at that as well. IT, okay. Someone's asking TCS and IT. Yes, TCS, IT. See, IT, TCS will take time to recover. Technically, see, if you look at it, if USD INR has actually gone up a lot, you should be like, you know what, it's very good, right? For IT companies, they should be doing well. But Indian IT companies today are sitting at the worst possible time when the INR is going up, going down. Like USD is going up and they are not doing good. So the impact is not going to be great, right? That is the problem. Right time to invest? Yes, man. If not now, when? Itna bura din ho gaya Nifty ka. If not now, when? That is the question, right? Would you want to invest at the top and not when it's down 12%? This is the best time. Absolutely, yes. There is. You cannot time the top. You cannot time the bottom. वो छोड़ दे, वो भगवान के नाम पे, right? But ये जो opportunity market keeps giving once in a blue moon, you should take it with 5 hands, not 2 hands, 5 hands. Yeah. Don't ask individual stocks, guys, because I won't be able to show many individual stocks. Not allowed. But we will take more macro related questions, right? What about housing finance companies? See, good question, Somay. This is actually might create a problem. If this war continues, our capex spend will go down. Our inflation will go up because of oil and pass through. If inflation goes up, then the government will have to increase interest rates, right? Because they can't have low interest rates and rising inflation. We will get into a big problem. And if they increased interest rates, then people will not like to take a loan and go buy a house. And if that happens, your housing finance companies will start getting affected. Right now, interest rates are kept very low, and that is why people are going and buying real estate at 7% interest rate, right? 7.15 to 7.5. But be careful because that tide can turn very soon. Same with PSU banks. I think PSU banks are now at its peak zone, right? A lot of people are buying the PSU banks now, but right now private banks are undervalued. You should be looking at good private banks, not public banks. Public sector has given the rally. Think contra, you will make more money, right? Let's look at that next. Impact of GLP-1 on pharma and CDMO. Look, yesterday I think that patent went away, semaglutide. A lot of companies have announced. MCure has partnered up, Cipla has partnered up, Natco Pharma is coming in, Dr. Reddy is coming in, Glenmark is coming in. Literally every single person is coming in. But I think it's too early to call who's the winner yet. Let's wait. Within 2 months you'll come to know who's winning and who's losing, because launching is one thing, telling the doctors to sell your product versus the competition is the other thing. So abhi dekhte who gives doctors more what do you call that, perks, and what the doctors usually recommend to the customers. That is what we'll have to look at. So 2 months de do, fir sab doodh ka doodh, pani ka pani ho jayega usme. ठीक है? What else? Yeah, pharma sector is doing well. No problem with pharma sector. But again, pharma sector depends on what pharma. Is lump sum investment okay in Nifty? Yeah, it's okay. Lump sum investment in Nifty is absolutely fine. But don't, if you have 100 rupees, don't put 100, maybe put 30, 30, 30, or 25, 25, 25, 25. So do you too feel like when rupee has depreciated too much, when everything stabilizes in some time, it can be a good trigger for FI to come back? Yes, Ayush, absolutely yes. But a lot of things have to become right for it to become good. For a couple of things, I'll tell you. Oil has to stabilize. After war has to get over. First, war has to get over. Oil has to stabilize. INR has to come back to 87, 88 levels, which is very hard, but it has to come back. Then the government has to first remove this STT tax that they have done, which is again not incentivizing FIs to be here, number one. And then you should also assume that Trump has to be silent for the next 12 months and he doesn't create a new problems or new tariffs or new war or new something. If all of this happened, FIR will come back. But now you think about it, it seems quite difficult, right? With many refineries infra hit, crude is definitely going to stay at higher price. Absolutely agreed that it won't go back to 58. I think 70, 75 should be okay. Can this be worst period for some years? Inflation, fiscal deficit. It looks like it. Guru, you're absolutely bang on point. And this is also, you have to take into assumption that Donald Trump will not say anything new and open his mouth and create more issues, right? This is all assuming that that is also there. Let's say this war gets over and we are back to silent mode. I don't think that is going to happen. I think more problems will come. So yes, can there be more pain ahead? Answer is yes, more pain ahead is more likely. And you can see these are not India's problems. We didn't create this. This whole fall that you are seeing in Nifty is not India's problem. The previous fall was not India's problem. The previous fall was not India's problem. But we are getting sucked into all the problems of the world because the world is acting stupid right now. Since the election, I think it's not our problem. It's not our fault. We were very good. In fact, right now, if you look at this chart, we were at all-time high on 3rd Feb, and cut to March we're at all-time low. So it is not our fault, but we're just getting sucked into everything, right? It is becoming more and more complaints for government, yes, for pushing green energy. I think recently they made a statement that now they're going to make it 4x bigger, because yes, now they have realized we can't keep sitting and importing 85% oil, man. We need to figure out, we need to push more faster towards green energy, and that is something that is happening. Yes, you're absolutely right, Sriram. Can you provide more info on HDFC Bank? The chairman has resigned and there are some ethical concerns. Boss, nothing has happened, man. I think it is just narrative being screwed up. HDFC Bank is very undervalued. They fired 3 people for some small issue. Doesn't mean that a bank that is such a large bank is going to have problems. Don't worry about it. These are all small things. ये तो issue होता रहता है, हर company में होता है. It is nothing big, nothing problematic, right? But again, I don't want to go into Trump is planning for Cuba next. I don't know, man. I don't think he's going to sit quiet because there are so many problems that US is facing. He's not worried about the internal problems. So to distract the internal problems, he is creating external problems, right? They have rising debt. Now, nobody's talking about the rising debt. They have rising bond deals. Nobody's talking about that. So if you keep the world occupied by looking somewhere else, you can slowly in the back end fix your issues. And that is exactly what's going on. They recently sold $8 billion of defense to Kuwait, $8 billion defense to UAE. So एक तो वो कंधे पे बंदूक रख के they shoot, right? That करो war, तेरा भाई है, आप झगड़ा करो, and अभी फिर nobody's there in the back. So I feel very bad for Qatar because Qatar recently built the entire ecosystem. They tried to say that now we are open to the world. They did the FIFA World Cup, and it was not their fault at all. Yes, it was US's war, Israel's war. Qatar got hit the most. UAE's got hit the most. A lot of people are not still agreeing to the fact. They're still saying everything is fine with UAE and Dubai, but it is not fine. Will things get better? Absolutely, yes. But you can't say that everything is fine today. They are getting hit. They will continue to get hit. Until this war doesn't get over, they will get hit. Real estate companies in Dubai are crashing, stock market. Real estate prices, maybe not because it is all controlled by the government. But these will have long-term impacting effects. So now smart money will migrate to, let's say, Singapore, because now Singapore has not had a fight with anybody yet. So Singapore seems like a good money for the HNI money to go. So that is what it is, right? What else? Let's take one more question, guys. But I hope you've learned a lot. I think this episode was quite heavy. Good learnings have come from this. A lot of information, but it's good. I think you have 30 minutes. I will put your time to good use. Yes, good question here. Funny how few rich people in the world can put half the world into turmoil just because there are names in certain files. Yeah, I know what you can do, man. That is how life is, right? The rich will always have an edge over the poor, and that is why we will always be middle class unless we start thinking like the rich and start moving towards that point. But till then, we can't do much. But this has been a good time. I am fully invested. If you ask me, I am absolutely 100% invested in the market. I've been invested 100% from the last 3 months. Whatever thoda money I get, I put back into the market because yes, I know these are all temporary issues. They will start going up again. I am invested in real estate also. I'm invested in this also. I'm buying more and more as much as I can. Not getting a lot of income to buy now, but whatever small income I'm getting, I'm buying as much as I can, right? Because market is down, I can't sell anything to buy, so I have to only buy fresh. I cannot change my old stocks to buy new stocks because my old stocks are all in red. So I have to keep buying new stocks and averaging lower. But kitna average karu? Now stocks are down 25-30%. उसमें भी average करो, दर्द में average कर रहा हूँ. But करना पड़ता है. We have to have hope that everything will be better. सब देख रहा है. But that is what it is, right? So don't worry, things will become better. We have been in this situation multiple times in the past. It will be a V-shaped recovery. We have done this multiple times in the past. We have not even gone down as much as the past, right? So many times. But one good thing is every time we have recovered, after that, the rally has been much better. Every time we have gone down below 200 days, the rally has been better, except this time because it was 2 different back-to-back hits that we got. But hopefully we will do better and we will go up. Again, if you look at valuations, Nifty large cap valuations are better right now compared to small caps. So if you are invested in large caps, you are okay. If you're invested in small caps, they might not do really, really well. But large cap valuations are looking much better. I would still play large caps, honestly. Mm, but yes, this war will have long term effects. It is not something that will get over tomorrow and we will be fine. It needs to end now. It needs to end before April 30th is the deadline. It has to end before April 30th for us not to have long term impacts. If we start crossing April 30th, we will have a lot of impact. Already now we'll have revenue impact on a lot of companies. The Nifty EPS will again slow down a bit. Corporate earnings might not look great, but yes, this is a problem. So April 30th tak we should be done. If not, your government will also get involved now. Your current account deficit will go up. Your GDP will slow down. The rate cuts will increase. Then that becomes a whole different cycle of not good performance. And market to फिर सबको निकाल के जाएगा, right? It will clean everybody out. Whoever has come since COVID, 80% of them would be cleaned up in the market, and that is something we don't want, right? But again, I will keep updating you. I've been making videos. I know even in this market, many people don't want to see videos, but I would say this is the time you start learning as much as you can about the market. I know like coming now and talking about companies and stocks are not going to help you a lot. So we'll do more little bit of macro. We'll understand a little bit where the world is moving towards, what sectors the markets can do well. I have been trying to do as many videos as possible for you guys to understand a little bit more from a macro level standpoint. But again, I think you guys need to also start learning more about this. So whenever I find a very interesting PDF article like this, I think I will come and teach you guys as well. Awesome. Cool. Very good. Very nice. Again, thanks a lot for staying and watching this video on a Sunday. I don't want to take any more of your time. So thanks a lot for coming. And if you like this video, click on the like button. And if you felt you got some value, then that red button called subscribe is also there. And we will try to do as many lives as possible in this bad times as well. And in the good times, I'll relax a little bit. Okay. Chalo. Thank you guys. Take care. See you. Good night. Bye bye.